Hey traders, this is MsPutOptions and today is 8/13/2014. If you haven't gone to my Facebook page and liked my page thus far, my Facebook page is MsPutOptions.com. It's all one word. So I have posted a lot of interesting things here on my Facebook page. One being there are several stocks out there that will be having earnings the opening on Monday. There are a couple of them that opened my eye here, or caught my eye, shall I say. We have Priceline. The ticker symbol is PCLN. And then we have Mankind, that's MNKD. And this particular symbol is CACQ. And I tell you the truth, I really forgot what that stood for. But we'll look at a couple of these ticker symbols here. If we scroll down here, I did a quick analysis on Google. And the ticker symbol for this Google is GOOGL, and I put that it's in position for uptrend. It's currently at demand where you see it at right now, and hopefully it'll be going to supply. And I'm basing it on, and you have to excuse me, I've been a little dyslexic lately. This is the volume is 1.9 million, not thousand. So the buyers are in control here. And as we're looking at the Williams percentile, this is a good time to buy some calls when we're looking at Google. As you can see, Google doesn't pay any dividends, and the implied volatility versus the historical volatility is beautiful. Implied volatility is 19.01%, with the historical volatility is 34%. So this is telling me that the implied volatility will attempt to catch up to the historical volatility of only 34%. So we already missed earnings. Earnings were 7/17/2014, and then our 52-week average is anywhere between 422 and 615. So currently it's looking like it's trading currently about 575 here. Let's go on with the next one and see what we got here. I just posted here talking about Priceline. A lot of people really don't know where Priceline is headed, and Priceline is having earnings before the opening on tomorrow, which would be Monday. And so here, if you're not sure if the stock is going to go up or down, you can always place a straddle. And if you would have placed this straddle on last Friday, it would have gave you a total of $300. And if you don't know how to place your straddle trade, just visit my website at www.MsPutOptions.com, and I will teach you how to do the straddle. So as long as Priceline stays above 1285 or below 1275, you are able to collect $300 if you would have placed this particular straddle trade. Okay, so the next one we're talking about is CCE. CCE stands for Coca-Cola Enterprise. And so right now I said is headed into bullish territory. Right now is at demand. It's going to head up to supply. This is my analysis. And I say pay close attention to the historical volatility versus the implied volatility. So earnings were announced on 7/24/2014. The stochastics are low, so it might be a good time to do a bull put vertical spread on there, or possibly to buy a call. As you can see, the Williams percentile is in a great position for buying a call option. The volume is great, is 1.7 million, so volume is great there. The implied volatility is 45, and the historical volatility is 20.05%. The dividends won't be paid until 9/3/2014, so we have to make sure that we're in and out of that trade by then. We see our 52-week average is anywhere between 36 and a little bit over 49. So this might be one to consider. The next one here, we're talking about Cameron International. The ticker symbol is CAM, and I believe it's in a bullish direction. We're waiting for a little pullback here. We're currently at demand. The plan is to go way up from demand to supply. Currently, our volume is great. It's 1.8 million. As we can see, the buyers are in control. The Williams percentile is telling me that this is a great position to buy a call. The Williams percentile is less than 80, it's a great time to buy a call. So there's been several little pullbacks to at least the negative 75 line. As we can see here, no dividends are paid out by this company. The historical volatility is 33%. The implied volatility is 21.39%. The VWAP is 72.56. And as you can see, when we're looking at the VWAP here, currently is trading roughly about, it looks like 72.60 if we look here when I took this particular snapshot. What else? So we have to really pay attention to the moving day averages, because the moving day averages are going on a downtrend here with this particular stock, and the 52-week averages are anywhere between 52 and a little over 74. So if it goes up to the supply here, that's pretty much is at the 52-week high. So we have to really pay close attention to that one. All right, so we did a little analysis on CA. This is the ticker symbol, and the company is CACA Inc. I believe that it's headed towards a bullish trend. We need to watch out for the Fibonacci line, and as you can see, the Fibonacci line here is at 61.8%, which is $29.89. So right now, the historical volatility is 81%, and the implied volatility is 17.4%. So basically, what this is telling me is that probably the CA is probably going to go into a upward trend. We have the 52-week average roughly going anywhere between a little greater than 27 and 36. And recently there was a MACD crossover. However, the MACD crossover cannot be seen in the graph, in this particular graph, but it's telling me that this is headed in a bullish trend. Dividends were paid on 5/23/2014, and earnings were on 7/27/2014, so we don't have to worry about that. The volume is 1.9, and I don't know why I keep putting K. It should be million, 1.9 million. The Fibonacci line is saying it's time to buy a call, and so is the Williams percentile, which is lower than negative 80. It's close to negative 90 to tell you the truth. So that's telling me it's time to buy a call on this particular stock. Let's do a couple of more here. We have AIG here, ticker symbol AIG stands for the American International Group, and it's I'm predicting it's going to have a bullish bounce from demand, and it's going to go back up here to supply. The volume is through the roof. I said right here, the volume is through the roof. It's greater than 5.3 million, and as we can see, the Williams percentile is telling me it's time to buy a call. It's headed towards supply, as I predicted here. The implied volatility versus the historical volatility, not a big difference. Implied volatility is 25, historical volatility is 27, and the VWAP is 52.27. So we have to watch out for the moving day averages, because they're all going in a downtrend. So we have to watch for those. Dividends were paid on 7/6/2014, so we don't have to worry about that. However, we do have to worry that earnings were just announced on 8/6/2014. And why do we have to worry about that? Because we know there's going to be a big fluctuation in the stock when earnings come out. The last one we're going to talk about is HOG, and this is Harley Davidson Incorporation. So basically, the bearish days are over. This is what my analysis is all about. It's headed into bull territory. So we're going to have to watch for historical volatility. Historical volatility has been 91%. That is beautiful. However, the implied volatility is 19.89%. So this is one of my reasons to believe that HOG will go in an upward trend. The 52-week is anywhere between a little greater than 57 and 74. Currently is trading for 61.73. So it's kind of like right there, almost in the middle there. So hopefully it will leave the new supply I'm sorry, the demand area and go at least to the new supply area up here. So it's currently at demand and hopefully it will go to the new supply area here. Volume is once again beautiful. It's 1.7 million. The buyers are in control and the Williams percentile is telling me that it's ready for blast off in a upward trend. Okay, so this is Miss Put Options. This is not a recommendation, but a consideration. So we'll see how these stocks play out on 8/11/2014, which is this coming Monday.